Hello and welcome back to the basic concepts. This is the episode, as you've seen in the title, about basic market structure. So very simple video, just for the people that are like starting to get to know how is it on the charts, candles. We already talked about the basic concepts before, and we're still gonna talk about other nice concepts. I have a list here of the videos I'm gonna make this week. And yeah, I hope it could be useful. Finish this playlist. We're gonna get into more advanced concept we're gonna put all together in the last episode. So let's go into it. So basic market structure. So the way that I like to explain basic market structure is to use this tool. Okay. So what is kind of a structure? It's kind of we think of like structure. I feel like a building. So like pillars. So in this case here, we can use this tool here, the brush, to kind of get to know like these pillars. Okay, we can draw a line where there are the candles. Okay, we can roughly draw a line. Okay, so basic market structure is what does the market do? A market goes up and a market goes down. So we kind of have to know, we have to kind of foresee what the market is going. So basic market structure is, you can see, market are made of higher highs. Okay, so the market is trending higher, or higher lows and lower lows. So it's the market can move many different ways. Okay, there is no like set combination or set thing that the market is following. You just have to get to know what the market is doing. So in this case, we are on the 4-hour time frame, so higher time frame. I already spoke a bit about time frames, but I'm gonna focus more on that in the later videos. But getting here on this tab, 4 hours, we can kind of see that the market is trending higher. Okay, so it's doing, this is the market dumped tariff, and then it created a higher low. Okay, lower low. It's from this. Okay, this will be the breakout structure, but here, this high here has not yet been broken, so we can just, as we will talk, you can just take the Fibonacci. The market dumps, retrace, and then continue to go down, as in this example. But here, the market dumps, gets a higher low, lower low, and then still there is a long way to break this low. Okay, but here in January we are, if we don't look at this, we are trending higher. Okay, we're not breaking this high or breaking this low, because that will be changing state of delivery and character, but this is more on the higher time frame. So for the higher time frame here, in this case, we are trending higher. Okay, so high low, high low, high low, high low. See, the market is still respecting those previous highs. Okay, so we don't go much below this. Okay, this is also called an order block, okay, or a breaker block. So the last up close candle before the move, the opposite move. Okay, so the market, see how it's respecting here this order block. Okay, so the market in this case now is trending higher. So here was trending convincingly higher. Now we're kind of stalling a bit. Okay, and so when we want, of course, to take a trade, here we are disrespecting bearish PD arrays. So also in this case, I will talk in the next video about them. For value gap here, see how we close above. So as we talk about the candlestick, open, close above on higher time frame, and we just go up, and then we retrace. And then we'll also talk about the Fibonacci tool, how to use it. But in this video, I just want you guys to know the basics about. So it's just going high, low, high, low, high, low, or you can go the opposite way. Okay, this is kind of, we're just gonna go maybe on the 1 minute. So 1 minute is the lower time frame. Okay, So we can see more swings. So the swings are highs and lows. So here in this case, we were trending lower. Okay, if you see this is the PM session of Friday. PM session, you can see here, high, low, high, low, high, low. And we kind of break, okay, here. This low here, we break in when we get here. Of course, in the 1 minute, it's a bit more confusing because there are, of course, some way more candles. And you can see that you can kind of, the black candles are the bullish, bearish candle, the blue are the bullish. It's kind of going, you have to kind of draw a line like this. And here, boom, we break it. So this will be a change, okay? So considering basic market structure is a combination of highs and lows. And the thing I want to say about today is that, wait, I hope that it's recording the video because it doesn't seem it's like recording the videos, but yeah. So in this case here, okay, so this was the trade I took. It was a nice trade you could take in Friday. Also this one here, I think I've taken especially this one. So here, market open, we trend lower, okay. So here we're trending higher, and market breaks, okay, this lows and this highs, okay. So we just go down, and basically after we tap here, so this was a 4-hour order block, and we took many lows. We'll put all together after. So here we make low, high, low, and after this low, the high, if you're continuing to trending down, we should low, high, low. We need to, if we are trending down, we need to respect this high, okay? But what does price? Price on the 1 minute, high, low, higher high, okay? So this is not a higher low, which means it's a high that's trending down, but it's a higher high. So we kind of, we do break the structure, okay? So the structure again is a combination of highs and lows. And here we break it, so we go over this high and we create a low that is higher than this high, okay? And so what does it mean? That the market is changing its delivery, okay? So we break this and we boom, trend higher, okay? We have a gap here that we want to try to maybe disrespect. We have also this gap. This is the first presenter gap that is very important. You see how price here then stalls around it, and also this old one. So the kind of trade, it could be, I don't use it yet, but it could be a 30-second inversion here. We can also use this order block here, which worked. And that was, I took about the entry right around here after this good reaction, because you see this week, news week. So at 10 a.m. there were news. And this week, this big week, just to take the lows, gave me conviction to go higher. And you see next candle, there's the target here. Target this, or you could target also this highs. But I target this, okay. And then what you can see here, continuing the day, we make high, low, high, low, high, low, high, low, high. But this high is not going over the next high. So we want to see a break of this low. You see how it is not clean. So when it's not clean, you just stay in sidelines. See how we have these big candles. This is, you should not watch this. You should not trade this stuff. And when here we have a low, we break the low. We go into this. This is a 5-minute gap. Well, the 5 minutes is very important. If there is like confusion in the 5 minutes, it's not that great. So you can see here on the 5, we're still trending lower, okay? Because we create a low, high, and low, okay? This low doesn't get below this, but it's not considered a structure shit. So we're still trending lower in the 5. So we're kind of looking for shorts. We create this 5-minute gap, this green one. And then on the 1 minute confirmation, we close below, and then you take the retap and you put your stop above the gap, or here I would put it like here, and boom, it goes. It went a bit in the stop, but we target this low, boom. So you can see how also market structure can help you where the trend is going. So on the 5 minute, we're still trending lower. On the 1 minute, we broke the structure and we closed below the gap. So market, its market structure is very simple, and it could be really understood in an easy way. And so yeah, just a combination of highs and lows, and you can kind of see where it breaks. So yeah, I mean, I hope I was clear enough. I'm trying to be as much of beginner friendly as possible. I know these are also, when I started, were not things that I would understand immediately. That's why I also have the Discord, and that's why you can enter and ask questions, join the lives. And I think the most important thing is to watch live streams of people doing it, and that's the most important thing. You can join for free, and yeah, that's about it. I hope this long video was useful to you. I'm gonna do a lot more than them, and we'll move on into the more advanced concept in the next playlist. So I'll see you in the next video for the fair value gaps.